Hey guys, what's up? So Sunday market breakdown. This is actually going to be quite a nice one, to be honest. It's very straightforward this week. So I'm going to go through this. I tried to make these ones a little bit more quicker and straight to the point because I do the comprehensive breakdown on the Saturday and then I kind of just formulate it for the Sunday. So if you do have any questions, do drop them in the comments below, and if you're not already subscribed, hit that button and we'll move forward. So what I'm really looking at over here on the DXY is quite interesting. If we look at it on the daily, we can see that we've responded to this low, which is nice. In fact, actually what's even nicer about it is you can even arguably say we've actually fully retraced on that as well. So what's nice about this is if you look at this as the overall range, we have it push low, obviously didn't feel that, didn't feel this, and then we've left this gap here as well. That doesn't mean we're going to come to the downside. It actually means that we're actually moving in this sequence where we're leaving these higher lows and we're moving to the upside. So even when we tap into these areas, there's actually a high probability that when we do go short, we're probably going to start filling all of these gaps, which is also nice to look at. More importantly, we have to understand how we're going to make money today. So what we're going to be looking at on the 4 hour is obviously we have created this floor and we left the gap and now we filled it and we've come into the area and pushed away. Now if you're looking for the lower risk trade, you're going to basically be looking for continuation above here for the related pairs. So anything above this area here would be good for the long. If you want to be taking a more aggressive approach, which you could probably take something like that, probably not that large, or just something like this, right? You could manage it into that high and then maybe even walk away with a small profit or break even before we reach that high, and then if it continues, creates more continuation, you can get scaled in and get it for the next continuation. I think this one is still a very good trade. It's just you have to understand that if it did kind of drop off and do this for whatever reason, like, you understand that this was just a part of something larger, then create the next leg to move lower. So you just be playing this as an overall move. Now there is the room for this to potentially tap in here and then basically go short as well, so we're not going to completely cross that off, but we'll get a clear message from the market if that happened, and then we could basically see it as this was just one overall larger area which could then turn into a larger 3-touch and sell off. I just don't think that's the way to go, because if we look at it from the daily, we can see that we have this, we have that, and then we tapped in here and we fully retraced on it on the daily, which is just giving us that nice momentum to the upside. Now going off that, we just want to see continuation. So I think it's very simple. When we see those related pairs, we're going to be looking at it, but something as simple as that would just be enough, really, where you've got that, you've got the floor, and then you could put stop loss below that low, that wick if needed, but we don't trade the DXY directly, and then you've basically just created something so simple, and then you can just take it on like that, where you've got your continuation, you can trade it and manage it into that high, and then basically have it in like this. I don't like over forecasting on the DXY as much, but this is beyond okay. I think even if you went 11 pips, just so you're an extra little bit below that wick, even into this high, you got 2.2%. So there's a high probability that we're probably going to strike into this point anyway. So I think positioning wise, you're still pretty good for that. You've created a clear floor, and yeah, you're good to go. So something to just bear in mind on the DXY. JP225 I think needs a little bit more development. I do like this a lot as well. There was a nice trade up there as well. Over here we're now coming in for the next stage of the continuations. I would really like to see something more in the sense of a 3-touch, but this is very understandable as well. If we scoop up, we near miss it, leave that gap, come back down, and then correctively come back up, take out this high, take out that, and then we basically push down insurance entry and sell. But it's very probable we could just get impulsive price action as well. So I will not only be looking for the insurance entry, but I'll be very much aware of a retrace here. And even if I was to get in with, let's say, 300 pips, which is not my most preferred, I'd probably look to go a little bit more refined on that and just see how it shapes up. Yeah, 150 makes sense, and then into the low there, I could probably walk away with about a 5-to-1, and then so forth, the floodgates open. So that's basically how I'm going to be looking at the JP225. The SPX, I'll be honest with you, it's one of those ones where we are seeing short momentum, but are we just coming in to tap into this area to create a floor? Real question now is that how do we continue to play this? If we are going to be going short, where can we get positioned safely and well enough? Well, A 3-touch would be preferable, but if we're moving in a run of momentum, it may not be the one that we're looking for. If this pulls back up aggressively, retests this area up here, gives us that sort of messier section, I don't think I'm very inclined for that anymore, actually. Looking at it in hindsight, I just think it's going to be a very difficult one to trade. I would have much preferred something like this. If that shaped up, why not, right? That would just make sense. I'd look for a 3-touch, even if it was a bit lower. If we broke below here, that's great. If we came in here, whatever, something that I can trade directly into that low that has momentum. I think I'm more preferred for structure over anything else. So I'm going to wait for some clear structure before I jump into any trade. I don't want to just jump into anything because it's selling off. I want to be very careful and deliberate with how I'm going to be trading this. So you can see that structures do formulate, and when they do formulate, we can take advantage of them and make money. You know, simple. If you got into an entry over here for the continuation, impulse correction continuation, you could have easily played it into these areas or even held through and then basically seen that as the floor, and then continued on the move higher, potentially got scale-ins and continued. So something to bear in mind, but as we know, it's a notoriously bullish pair, so a lot can happen. This can still develop, become a bear flag, bull flag, whatever. We just need to be careful with it. Euro USD, so this is one of my most favorited pairs for the week ahead. So what we can see here is that we've tapped into this hook point over here where we've had that sharp sell-off, continuation sharp sell-off. We filled this in, we correctively moved away, and we've come back in. So arguably, if you really wanted to see it as this being the overall range, so be it. I just think the nice thing about this internally is that we did have this section here where you can see that we've had the 1, 2, 3 completion, taps into the hook point, and then now we've had solid rejection, which is clear as day on the daily time frame as well. We've had that daily retrace, which is just like the DXY. Then we go into the 4-hour, and we can see that we've had 4-hour momentum. It's been a little bit corrective, don't get me wrong, but it's completely fine because there is structure to back this up. Now, I do want to wait patiently to see how this formulates. There's 2 ways I'm looking at it, but more than likely, I do want to see if this area gets tapped into, but I think we have that this is the level there, and then if it comes back up and it taps into here and it goes higher, so be it. So I think if you take a risk entry in this area, you do want to cover above there, but more than likely I'm going to keep it very simple and just see if we come all the way back up, and it kind of gives you that U shape, push down insurance entry, and I can get positioned in there. Stop loss still above. I might have to use a larger stop than 10 pips if it does come in a little bit later, but that's basically how I'm looking at it. Now, I know I've put this on the 1-hour time frame. I'm not exactly looking for a 1-hour flag. I'm going to be looking for something more so on the 15, but I just wanted to put it on the 1 hour so that you can see it clear as day. But yeah, it would be more so a 15-minute flag. So solid push down, rejection from that area, and there. You could even take the retrace in there if you're looking at this, but I just think it does hold a good level of risk, and you just have to be willing to play it. But I wouldn't say that that's a bad trade even if you took the retrace there, as long as we can really evaluate how we approached it. Just the insurance entry would be better. And then if you take a trade down here, it's a lot lower risk because you kind of cleared this low, we're in a real run of momentum, and then you'd basically get in for that run. And then I'd probably anticipate some sort of V shape in here as well on the way down, where we push up, leave a little reference point on the 5-minute, push down, come back in, tap into it, and then we sell off. So just keep a close eye on the lower time frames as well, because there could seriously be some good opportunities in there as well, because with the DXY's positioning and obviously these related pairs, we could really turn around and make some really good moves. GU, so GU is a little bit more of a more structured play here, and I think this one looks a lot nicer in the sense of how we could move. Once again, we have the hook point here. If you want to draw on some structures, you can do. I don't think it's very necessary at this point. Internally, again, you could just argue that you had this, and then you've got that. I just wouldn't waste my time really forecasting all of that on it. I'll just say, look, we have the hook point there. We understand that there's confluences in there as well. We go into the 1 hour. Great. Now we have rejection. We're looking for continuation. So we're coming into this low where this is the invalidation area for the larger flag, but this doesn't look typically like your first leg for the larger flag. So I think the real gameplay here is if we get clear, deliberate 3-touch continuation, we can get positioned well enough. Even with a 10 pip stop loss, you could probably get away with it. and you could probably get positioned in there to fill the low as a minimum if we hover just above it, which is nice. And then you probably hold the break even, you run around about 2.7, 2.8, and then if it drops off, you're in for a phenomenal run as well. So this one has a huge amount of potential. I think it's a stunning trade in itself if it can get shaped up. It could become a little bit more complex. We just have to wait and see how the structure formulates. But for so far, we have got a first point for the flag as well here, which looks pretty good. So again, another straightforward trade here where we can basically be looking for further continuation to the downside. So I think this is going to be a really, really good stunning run. And then we've got New Zealand yen. New Zealand yen, I'm still waiting for something a little bit more structured, so I'll just quickly go over to the daily. We can see that we've responded from a interesting area over here to the left, and then if you look at it on the weekly, that we've had solid rejection now. So that's the first sign of a good rejection on the weekly. We've had two strong candles, a third one will make it even better. So looking at it on the daily, it makes sense for us to be consolidating sideways a bit to accumulate some volume. After we've had that very impulsive move on the daily, we can see that, waiting for a weighted flag would make more sense. We did have some continuations in there, not the best, but they were there. Now that we've cleared a majority of this price action, that corrective move, if we can get a larger flag in here, that would be great. If it does come in to be something ever so much like this, so be it, not too bothered. I'll be looking at it on the 1 hour. And then this is risk entry territory for me, to be honest, as well. I've just forecasted a flag in there as an additional confluence. If you didn't want to take the risk entry, you could obviously take the 5-minute continuation there or whatever. But more so, you've got your high here, comes in, near misses it, scoops up, taps into, maybe even this is the retest, and then we get a sell. So I wouldn't go too tight in these areas and do something like that. I'd be like, if you're going to take it with like 35, 40, because you just don't know with these yen pairs as well. Like they could just, you want to experience this trade. That's the most important thing. Like I get it, sometimes you want to get in really aggressive, but even on this pattern structure, you've got about to the low 2.5%, more than enough to manage. And then if it does turn off to be the one that really sells off, you still got positioned in it, and you could walk away with a very decent percentage, early on in this run as well. So don't try choke it, don't try jump in too aggressive. If you do, so be it. But then if you get the continuations in there, that's where you can be more aggressive, because you've got more of the run on your side, and you can run in 15 pips, and then next thing you know, that's turned into your additional on top of your first position risk entry with the scaling, and then you're running pretty crazy percentages. So that's the way I see it. Likewise, just to really point this out, if you take the entry there and it does drop off, then this could be very aggressive on the run as well. So we see it from time to time. When the structure's complete, we don't really go around and get the insurance all the time. Sometimes we just drop off and we get very aggressive drops because we're so high up in the run. So something to just bear in mind and be mindful of. Aussie US dollar, I'm looking more short on the 2-touch V shape. So if I look at it from a higher time frame perspective, it's not really the cleanest. We're kind of just hovering, but the only difference is because the other US related pairs will be shorting, it makes sense to also be looking for shorts on Aussie and New Zealand US dollar. So if we can scoot back in, tap into those areas, maybe even push higher and retest into this, push down insurance entry, I'll be all over that. I wouldn't even mind going for 10 pip stop loss, to be honest, but because it's so close to this high, I'll just probably compensate and put a little bit extra and just cover the high, just because, and then basically get in for that trade. New Zealand US dollar, I prefer this one a little bit more because it gives me the sense of a running channel to the downside. So what I'm seeing here is, let's just call that as the first low point interest. We're coming into it with a bit of corrective price action, which is completely fine. We can still just kind of drop through it, and you've got 4-to-1 to manage into that, and then if it does drop off, it turns into a pretty hefty trade. So if I just zoom in a little bit closer to this, you can see that we have this channel formulating here. We have this little point that's kind of just peeked out and shown itself, and then we correctively come into it, we tap into it to become a 2-touch. Maybe internally we have structure, and then we push down insurance entry and we go short. And I think that would be the best gameplay to kind of lower the risk, mitigate against a lot of the variables that I was looking at. If this did turn into something larger and messy, I would still look for a re-entry short on a 3-touch, but more so I'll be looking to trade into that low there and then basically manage it accordingly. So I think, just to kind of point this out, if I do get that insurance entry there and I get a 4-to-1 on it, I will definitely be locking in around about 2%. Just because if it did kind of just get a bit messy and pull back a little bit, for whatever reason, I just don't want to be too close to price action. And then at the same time, if it did pull back on us, which I don't think is going to be very likely, but if it did, then at least we walk away with some level of profit, and then we can get repositioned at a later date. New Zealand CAD, very similar situation to New Zealand US dollar. I think a lot of the New Zealand pairs are kind of correlating quite well. What I'm seeing over here is that we have this larger 1, 2, 3. Obviously we had the gap and then we filled it, we pushed down aggressively, and now we're coming down correctively. What we're seeing over here is that level of that running channel vibe, which is quite cool. What I do want to see here is that how do we come back into that trend line. Now I don't usually trade trend lines as much, but when it comes to a running channel, it is a part of structure. So I will be looking at this one pretty closely, and then how the structure formulates, if this becomes more of a bear flag or whatever, and then basically just kind of take it as it comes. So see how this formulates, see how this shapes up, and then basically take advantage of it at the right time. It's very simple. We have our first touch, second touch, third touch, middle section, and then we drop, and we just continue to the downside, and then we have a trade into those lows there, where even if I went with 20 pips, which I don't think is totally necessary, but it's there, I could still walk away with 3.5%. Obviously if I go with 10 pips, which is a little bit more tighter, call it 12, 13, still get 5-to-1. And then if it does end up becoming the one that kind of just really gets aggressive and drops to these areas, it does become much more larger of a trade, and you'd probably get further continuation within there to get lower. So the nice thing about these is, because that is the correction stage and it's a running channel, you can get positioned in this within the correction still, and then what happens is you manipulate this impulsive phase, and then you take it, and next thing you know, this is the impulsive phase to drop off. So it was just very, very unusual for a lot of people who just didn't understand these price structures, where it was corrective and then just drops off, and then they're thinking, well, why didn't it pull back, this and that? Well, because you didn't understand the structure fully. So bear that in mind. Aussie CAD. Aussie CAD's a cool one as well. I think what's nice about this is that you've got that value area, which was a more of a hook point, that correction that got tapped into, and then we had a level of rejection. Now the interesting thing about this is that we've pushed away correction, pushed away, now we're just coming into another correction. We want to see follow through. If we can really follow through with something like this, which is still higher risk because we're still very high up in the run, then we're good to go. I need to really see this break this low and create the continuation through it. Otherwise, if it's above it, I'll leave it and then wait for the next continuation below it. I think if I wait for something like that, it's a much more lower risk trade, and I can get positioned in something like that to go low, opposed to trying to get something above this high, which can then turn into a larger something over here, which does, you know, that, and then we move higher. And then next thing you know, the structure was more so like this, and then we were actually supposed to be positioning ourselves for longs. So that's the other variable there. I'm not looking for the longs though, I'm still looking for the shorts, but I understand that if this doesn't follow through and this doesn't play, then we are looking at potentially a larger flag to go to the upside. USD Swiss. So USD Swiss with the DXY going long, I am looking at USD Swiss potentially going long as well. Now, with the nice thing about the DXY is that we had that daily retrace, and then coincidentally on USD Swiss we had a pullback from the value area as well. Now it wasn't a full 50% retrace on this, so again, it's not the best of positionings, but I think it was just borderline 50% when I last checked. I'm just going to double check that again. No, it wasn't. Yeah, it was below it, but I think at the end of the day, what we can see here is that even on the weekly, we wicked, tapped through it, and then we pulled back on it. So even at this point right now, I'm not looking for price to come all the way back down. I'm aware that it's possible, but I think what we could probably see, if we get into the 4 hour and the 1 hour, we can see that we're creating a floor here. If we can come in there with internal structure, then we could probably get in with more of a footprint entry over here, where we can get positioned at the low, even with 10 pip stop loss, and we could play this as a pretty good run, even to this high. You're looking at 2-to-1, and then you've got a clear run to the upside here, where it's running around about 10% So this could turn into a really phenomenal play, and you're quite early in the run as well. It's just when you do take a trade here, don't be surprised if you do see something like this, and then it just turns into that over time. But I genuinely don't feel like this is going to be the one to go short. I think right now we're seeing more of a reversal play to go to the upside, but it is a little bit more high risk taking the trade down here. Taking a trade up here would be slightly better, but I think truly if we get that internal structure, we tap into that area, or we get a 1 2 3 in this area, would be good for them longs, and it will be phenomenal. Aussie Swiss, so this is more so on the short play as well, which is quite interesting. So what we can see here is, yes, there is a gap at the high over there, which you can see on the daily, but I don't think we need to be worrying about that as much, because what we can see is we have heavy rejection coming in on these CAD pairs. Now, when you zoom out and really look at them, it doesn't really look like your most bullish pair. So even if it just suddenly started to reject from these areas and started going to these lows, I wouldn't be too surprised. But obviously that's not what we're really just here to just kind of do, is speculate on where it's going to turn around. What we need to do is just really evaluate price action, and what we can see here is strong rejection, and now are we in the continuation phase. What I then see over here is that we have clear deliberate price action formulating. If we can get a 1 near miss gap, then 3, we can see that with maybe even internal structure, so be it. Could get positioned for the risk entry and then take that into the short, even to this low over here. If you got in a bit more aggressive, which I would try to, depending on swaps, you get an 8 to 1 into that low, which is pretty fairly a clear run. And then if we go down for the wick fill, that turns into a monstrous trade. But you can see how if price breaks these lows and does it impulsively, we've got a very clear run to the downside. So I think this is a phenomenal pair to just really be paying attention to. I don't think price has really created any floors to move higher just yet, so this would be a great area for price to tap into to then move higher. But then at the same time, we just want to be wary and see you know, what type of price structure are we really trading in, and I don't see anything to really show that this is looking like a great continuation just yet. We need to really wait and see. That near miss, tap into the bottom of the range, we come back in, we fill it, and then maybe we continue, tap into those areas, sell, who knows. We just need to wait and see. But there's a clear run from here into here. If we can get in with anywhere between 10 to 20 pips, we're in for a pretty decent run. So Aussie Swiss, Aussie Yen likewise. I think this is the only other yen pair that I'm kind of just looking at really. We've pushed away from those value areas, you can see just there. We can see that we are looking at some downwards momentum. The daily, the weekly looks great. We just want to see continuation. I want to see more of a deliberate 3 touch, to be honest. I'm not looking for 2. I want to see this come in, creates a floor, comes back up, even near misses, corrective, middle section, whatever, and then comes back up, taps into that, gives us the 3rd touch, take the risk entry, and then we go short, and it's clear as day. And I think that's basically the only other yen pair that I'll be looking to go with. I think New Zealand yen, Aussie yen look good. V-shape possible, but more so I think at this point now we're kind of just looking at this being a structured continuation. So we have to wait and see how that formulates. Gold, on the other hand, let's have a little look. So we've got the 1 2 3. We've tapped into it. We've had heavy bodied rejection now. If you look at it on the daily, you can see it as well. That's just a really solid sell-off. If you look at it on the weekly as well, it's just kind of like very strong pin bar, wick through it, come back down, respected the structure. Could this be the beginning of a reversal? That's what a lot of people are probably thinking, but this could also be a beginning of a trap. So what we really need to do is just play it as it's coming, really. And if we can get continuation in this area back into that would be great. So what I'll be looking at is a little bit more refined, is let that be the first touch down here, and then it drops off a little bit, comes back up, creates the second, pulls off, creates 2 floors, 2 bottoms, and then pulls back up, 3rd touch. You get the internal structure, taps into the liquidity just sitting right there, and then we sell off, and then you can get positioned in here pretty well with, call it even 10 pips. And then even to the low, you can manage that. You walk away with roughly about 2% on that flag, and then yeah, you start moving lower and lower, and it can just turn into a pretty monstrous pair because we're so high up in the run, and we could be overvaluing this massively. This could just really be playing into and expanding as well. It could really come down to these areas. We just don't know. And if it just ends up being the one that just really just starts to rapidly sell off, then, you know, this just turns into a monstrous position. But really and truly, I'm not married to this, just really selling and selling and selling. It's just when you look at it from a high time perspective, it's just way up here right now, and a lot of people could argue it's overextended. I personally think that this is very undervalued, and I don't think that we're going to really move significantly lower. I think gold is definitely a pair that's going to continuously move bullish, but for now we just need to take a message from the market, and if we do get a short, we could easily walk away with a decent percentage. If we get that structure, we could walk away with a break even at most, at minimum, sorry, and then a 5 to 1 to these lows, and then if we do complete and just start filling that, go to 10 to 1, and then you could be more aggressive and get out of the markets around these areas. But something to just really bear in mind, that something like that could still have a lot of potential because we're in a run of momentum. US 30, similar situation. Obviously we are trading a very bullish pair again, so taking something like this does hold layers of risk, because this can just really turn around, continue going to the upside. But what's nice about this is we're just hovering below that retest, and the question is, can I manage it into the retest? And the answer is yes. To the retest, I've got about 5.3%. To the bottom of the flag, I've got 3%. So if I do take the flag, at least I know I can manage it to the bottom of the flag, which is 3%. And then if it does continue going, I could be more aggressive, or just hold at 3 and just see if we can follow through. And if we do follow through, the floodgates do open on this pair, and we get into an extremely phenomenal position with massive downside potential that could turn into an absolute banger of a trade. So it's not something that I just really want to just write off, but I do also understand that it requires a huge amount of patience, something that a lot of people do not have. And when you are taking a trade like this, you don't want to just get in and out of the market feeling like it's a quick scalp. You need to be getting into the market, understanding the long-term potential on this, right? Managing it accordingly, be very structured. Okay, we're at 5%, I'll have 3% locked in. Okay, cool, now I'm running around about 10%. I know that 10% is a huge amount for me, so I'm going to be maybe locking in around about 7 or 8 at max above this little hook point or whatever, and then price drops off. Now it's at like 17%. All right, cool, I'm going to be more aggressive, and I'm going to lock in around about 13. I don't really care, I'll just be there, and then just kind of just trail it, go along. Just at the end of the day, if you're on prop firm accounts and stuff as well, then okay, it makes sense, you're going to want to be more aggressive and stuff. But like I said, it's the case of if you lock it out too early in some case scenarios, then you actually miss out on passing your assessment just to kind of make a little bit of percentage on your account or close that gap. Doesn't necessarily mean you won't pass, it just means that you might be delaying your potential for you to actually move forward. So this is just an example of one case scenario, but I just want you to understand that, because it's very easy to fall into that trap. So clear as day, what I'm looking for is, you can see it here, we create the floor, we push back up, maybe internal structure, it becomes a 2-touch with that near miss, and we fill it. Or if it does become a 3-touch, so be it. It might develop into something a little bit more complex. Once again, if it does, I'll just read through it and understand it, but I will be looking to get involved in here. Could go 60, 70 pips max, probably around about 80 at its most, but 60 would be a sweet spot number for me. And that's basically what I'm looking at for US 30. Okay, Germany 40 as well, another very nice pair. Now, even though you look at price action from here, you're thinking, okay, now that's a bit choppy, it's a bit all over the place, but look at the daily. Look at the run we're in. Solid bear trend right now, right? There's a lot of momentum coming in. Where do you see the bulls really pushing this price? You don't. When you get into the 4 hour, you can see that, okay, well, we have impulse correction, a bit more for scoop, impulse correction, impulse correction, impulse correction. We are moving. It is corrective, okay, but we are moving to the downside in a very structured way. These are the sort of sequences I do enjoy trading because of the pure reason that it's respecting the fact that we have impulse correction, and continuations and so forth. Now, the good nice thing about this is we do have this low, but we're trading through it. So then when I isolate this and I look at it a bit closer, if this turns out to be the next correction, can I manage it into the low? Yes. What can I walk away 3 to 1? And then where's the next real price point target? It's all the way down here. So what am I looking at? I'm looking at roughly around about a 7 to 1. So I've got roughly around about a 7 to 1 there, I've got about 10 to 1 there, and then if the floodgates do, for whatever reason, open, then we can see this potentially be a trade that turns into quite a big trade. I just think that Obviously with a lot of these indice pairs selling off, it makes sense to be trying to get short on a lot of them. It's just be mindful that sometimes you might get into a short and be too optimistic, and then it pulls back on you and moves back to the upside. That's the risks you run when you are taking these trades, but don't let something like this slide. Still a phenomenal position, so just want to bear that in mind, that this is still pretty good. 2 touch a little bit more aggressive. If you get a 3, it's even, I think a 3 touch might be asking for too much, to be honest. So let's just wait and see how price formulates. If we do get something a little bit more clear, where we get something like that, then we kind of come up near miss, we give 2 bottoms, come back up, fill the high, and then insurance entry push down. That will be phenomenal. You know, I'd be able to get in on that extremely tight. That would turn into a mega trade for me. Honestly, that would be the one. I think I would be out a little bit sooner than most. I'll probably be out of the market around about these areas here, around about 17-18%, to be honest. So something to bear in mind. I mean, you know, with a different stop loss, you'd be looking potentially down here at some point for a 49% trade. What is that? That's insane. But realistically, we're not going to be holding through all of that for that long a lot of the time. We'll probably be out the market at 17-15%. We'll be more aggressive in these areas. When it hits around about 13, we'd probably go, you know, aggressive with, call it 10%. Comes back, pulls up a little bit, does a little bit of whatever over here, and then continues to the downside. Only makes sense naturally. But anyway, guys, this basically covers the DAX. You can see there's huge downside potential. Obviously, I'm looking for the risk entry, so I will be looking for that larger stop here. But if I can get in, if a insurance entry shapes up here and it meets the criteria, I will take a small loss on my larger stop trade. And I'll just get involved on the more refined one. It's a little bit more aggressive and whatnot, but in terms of risk reward, it plays out a lot better. I understand the trade inside out. It works well. It's retesting the back end of this. There's just so many layers to something like that that I would much prefer something like this. But the first trade I would get is probably the retrace. So just to bear that in mind. WTI Co USD, I think this one is a stunning trade. So there was a few banging trades on this along the way, but what we're really looking at now is we're looking at this as the low, basically, and we just want to see if price responds. Sorry, that wasn't the low. This is the low that we pierced, and then we just marked it on there. And if you want to argue there's a 1, 2, 3, you could arguably say that. It's just internally, when you look at it, it's not the cleanest of structure as well. I think what's more important right now is that, are we in a downtrend or an uptrend? And it looks like we're in an impulse correction continuation phase. So if you look at this as one big overall range, then you can read through it and then basically be like, okay, fine, so that's my structure to go long. So then I now need to wait for long confirmation. So how would I be doing that? I'd go to the 4 hour for one, and then I'd basically be waiting for confirmation that we've broken this low, which we have done now. We've closed out of it, which is nice. So you can see that we're now trading below. What we do see is we do have a little bit of price over there, which we could just gravitate and tap into, but more so the 1 hour is where the clue is. What I would like to see is just a solid retrace back in, continuation, and we go long. Without the continuation, it's so risky. You could take the 4 hour trade, refined, yeah, I think that could work, but I think waiting for that insurance entry is the go-to. If the flag is up here, so be it. That's what's worth waiting for, and I think that's where the money's going to be made. So that's the trade that I'm going to be looking for, and that would be the trade that will probably take us to these levels, and that's where the money's going to be made. Look, if that's a 30 pip stop loss, if I can get in tighter, I will. It just turns into a more monstrous trade. Just need to wait and see. But guys, if you are doing WTI Co USD US oil trade for next week, bear in mind that we are in a big move to the upside. So be on board with your management, but don't be too aggressive. I would say I'd say just understand this. Obviously we know with US oil we can have these crazy swings from times, so price that in when you are managing your trade. And last but not least is Aussie 200. Aussie 200 is one of my most favorite pairs, because basically what we can see over here is that we have this larger corrective squeeze to the upside, but as we've broken above this high, we've now completely pulled back in. When we look at it on a weekly perspective, we have rejected with a 50% retrace, which I'll just take it from here to here, and you can see here just borderline we're on the 50%. As we have that data there, we can actually go over to the daily now and just say, well, do we have really daily rejection where we have bear candle, bear candle, bear candle, not much bullish rejection in there. We look at it on the 4 hour, and again, it is very bear pressure filled. Go into the 1 hour just to refine it a little bit more, and this is how I'll be looking to take it. So if we look at it like this from a higher time frame, we had a correction which failed, pushed down, broke below it. We had this correction, which again wasn't the cleanest because we didn't quite fill it. It's okay, we're in a run of momentum. We then sold off, we created a small correction there which was internal. Again, wouldn't want to take it because it could still come up here, fill it and sell. Now we've broken this low, we want to see continuation below it. So what I would like to see is it pushes down, creates two bottoms, comes back up, fills that, taps in, pushes down, maybe gives me an insurance entry, and I can get in for a more refined entry, which is something that I'll be more preferred for. 10 pips would be awesome. If not, I could probably still get in at that level there and get in for the shorts. Only thing is, if I get in over here, I know that this could probably just scoot back up, but if it does, then I know that it could be a part of something more messy, more crazy, and something I don't really want to be too involved in. So a trade like that would make sense. And then if you look at it from a management perspective, even to the low, I'm looking at around about 3 to 1. And then if it does open the floodgates, it can just really turn into quite a good trade, to be honest. So very manageable, very straightforward, and very much in line with structure. And that's what I kind of liked overall with this week's SMB, is that a lot of the trades that we are looking at throughout the week are very structured based. They're very much supported with the higher time frame, and we are in a very good area for reversal continuations, to be honest, because a lot of the trades have been confirmed. I think the interesting ones as well is New Zealand US dollar and New Zealand CAD, because we are looking at running channel continuations, and that's not a trade that I've been taking so often and so frequently. So that will be priced in when I am looking at these trades. But then at the same time, some of these are priced so phenomenal right now that honestly, if you get into these trades, it would make more sense to just deep down want to hold on to these trades and see them really play through to really experience a very longer term manageable trade. But then at the same time, that's not the way that you're going to really make money sustainably. Like, you get positioned over here, you hold, you know, it comes back up to these areas, you walk away with that, you still paid swaps and all of those. I mean, there's layers to how you want to trade. I just think positioning over here would be great. Another trade there, and next thing you know, at these lows, and then you start closing out on your positions in these areas, and then price goes, continues. You know, like, there's so many layers to how you want to be making money in the markets. It's phenomenal. I'm really excited. I'm really happy with the pairs this week. I know I had to filter out and take a lot of pairs out as well. I was quite excited to see quite a few of them, but then after a second look, I really did realize that a lot of them just weren't worth putting them on watch because of the risks involved. This one almost made it on watch, but again, we have so much more phenomenal pairs on watch this week. Sometimes less is more, and truthfully, when you have so much opportunity on board, just pick a few good things and just stick with those. And I promise you'll probably make a lot more money by just focusing your attention on the ones that are just really giving you what you need. And yeah, you might miss a whole bunch of positions at the end of the day, but then what really matters is that you stuck to your guns. You know, you knew what you wanted to take, you knew how you'd take it, and you put your full focus down on the ones that will, to you in the moment in time, were the most important. And at the end of it, despite profit or no profit, you stuck to a process that is replicatable and sustainable, and that's what's really going to make you grow long term. So guys, thanks for watching. I hope you enjoyed the video, and I will catch you guys in the next one.